So Marcie, it's great to be speaking with you today. I know that you are sitting in sunny California and I am in not so sunny London, but nonetheless, it's a pleasure to be speaking with you. And I wanted to start by looking at the big picture, the impact of the COVID-19 pandemic on the US economy. There has been some positive economic data recently showing a decline in unemployment, but at the same time, we can see that cases of COVID-19 are still rising rapidly through many parts of the US, including California, prompting further lockdowns. So how sustainable do you think the US economic recovery is?
Hello, and thank you for the question, Vanessa. And yes, it is nice and sunny in California, but it's triple-digit heat, which I haven't quite gotten accustomed to. But I think what we saw, data coming out of May and June that was broadly supportive, but it was expected considering the reopening of much of the economy. But I think what we're seeing now is a slowing or a little bit of a stepping back in recent weeks due to the continued spread of COVID-19. We think that, if you think about the economic recovery, in these letter shapes, a V-shaped, I think is where we are sitting at, likely a sharper beginning to that, but a longer recovery as we continue to see these bumps in, reopenings and then having to step back because the healthcare system is really being stressed to the point of, not being able to serve people who, have been impacted by this pandemic. So, but we also think that the risks are growing for a W-shaped type of recovery if we don't get this thing under control pretty quickly. Of course, that's all very dependent on a vaccine or a better treatment for, for those who have been impacted by this. But we're a long-term investor. We focus on the fact that we have to earn 7% on our money year over year. And, that's the primary focus for the fund right now, that we have to carefully manage all of the risks. We're highly exposed in order to get that 7%. And so this is something that we're watching. We certainly didn't expect the volatility related to a health crisis, although we had been planning for a downturn in the market for quite some time.
And I want to come back to your 7% target in a minute, but just in terms of markets, what do you think can be done to rebuild confidence in capital markets? And how different would you say this crisis is to previous ones, including the 2008-2009 financial crisis?
Well, I think first and foremost, having this be a health crisis is quite different than, the crisis, the financial crisis from 2008 and 2009. And even though there were several lessons that CalPERS, along with many other institutional investors, certainly learned from that time period. And I think one of the biggest lessons that we had was, the importance of liquidity. And, when, mark-to-market assets decline to a level that you're having to sell those assets at absolutely the wrong time, coming into this downturn and having the risk mitigation plan that we had in place, really to address the drawdown risk, has really helped us, has advantaged the fund by a significant amount. But, we do expect a prolonged recovery. We think that emerging markets will continue to be important. I think emerging markets that have good policies or have some control over those policies, i.e. shelter in place quickly, having some control over that, they're going to recover much faster, but it will be, it'll vary by country. It's probably significant variance by country, but the pandemic and the response that we're having along with other investors, there are also opportunities in this market that, we didn't get an opportunity to exploit on in the past. So, we're exposed globally. We pay attention to the global markets, emerging markets, extremely important to us because that's where we see growth happening. And we have to have exposure to those growth economies to get close to our 7% return target.
And I mean, I was going to ask you about emerging markets because, of course, India and Brazil are among two of the worst hit countries at the moment from coronavirus, but you're confident in that emerging market recovery in the long term?
Yeah, in the long term, and in particular China, I think China, we've certainly had to respond to some questions or criticism about our exposure to China or particular companies in China. But we do think that some of these emerging markets will come out of the recession much sooner than others. And we're going to watch for this. We're not going to change our exposure at this time unless something happens with the administration here in the United States where that is just not a legal investment or an opportunity for us. But again, in order to get growth, 7% requires growth, and that diversification that comes with emerging markets is extremely important to us.
And I want to talk about inequality because there's so much focus right now, so much debate about inequality, whether it's racial inequality, social inequality, economic inequality. I mean, what do you think can be done firstly to reduce economic inequality? But also at the same time, is this sort of social activism and the attention on these issues, is that changing your view on the type of companies that CalPERS should be investing in the long term?
Yeah, thank you. I do appreciate that question. Human capital is, if you think about ESG, S really is around human capital, and CalPERS has been, really thought leader, I think, an action leader around the issues related to human capital. It's been in our investment beliefs for over 10 years. It's one of the 3 forms of capital that we think that we have to be exposed to, and we think companies need to be thinking about. The other 2 would be, the physical capital or the financial capital of that particular company. But I think more recently, our activities have been centered around disclosures, around transparency, around the data that we, as a large institutional investor who owns about 10,000 companies, we want to understand how, the companies are incentivizing their workforce. What kind of benefit programs are they offering to their workforce? And if you think about COVID-19 and this pandemic, what we all saw was significant disruptions in the supply chain. And that's a risk for an investor. And so we want to engage with those companies that we're investing in. We want to know how they're managing their human capital, no differently than how they're managing their financial capital. And that requires much more data being available to shareholders like CalPERS. Now, we'll do those engagements more privately. We are not in the business of publicly shaming companies, but we mean business on this. This is something extremely important to us. We believe it is kind of that secret sauce of what's going to keep a public company sustainable over time, and not just focused on the quarterly returns that they get. But CalPERS is here for decades. We want to have these companies thrive and be successful for decades. So our attention has really been around data, transparency, some work with the Human Capital Coalition, with ICGN, and other organizations who are really helping us. Again, CalPERS can't do this on its own, but we're petitioning to the SEC and really asking that there be a requirement, a regulation that would have public companies giving us this type of disclosure.
I mean, further on the point of ESG, there's also a lot of discussion about building back better from this crisis. Do you think that there will be a meaningful shift towards low carbon policies from this? I mean, not just in the US, but elsewhere as well?
I do. I think sustainability is becoming, there's a couple of ways that we look at it. Certainly right now we have to look at it from a risk framework. We just issued our climate-related financial disclosure on our own portfolio. And, the goal is to be net zero by 2050 and to hold carbon emissions in the portfolio to 2%. And, and that report indicates that we're at 3.5. So, because we have to rely on this wider economy, we need that wider economy to do well. And, frankly, there are other countries that have been better positioned to implement, if you even think about energy, cleaner energy opportunities or options. But the alternatives still seem to be a little on the short side, if you will. We're not finding a lot of opportunities for us to directly invest in that would help get us to our 7% return target. So we have to look at it a little more on the risk framework side maybe than the investment side. But long-term value creation has to have strong, sustainable financial markets, and we believe that ESG standards, whether, no matter how people want to define ESG, whether that's climate, whether that's human capital, whether that's governance of public companies, and frankly, even private companies, how portfolio companies are being managed by, the general partners who we invest with, that we want them thinking about these risks very similar to what I spoke about on human capital risks. That this is multifaceted, and this might take some time for there to be a true investment thesis or return thesis at 7%. But much of the world who has public pension plans or is running a pension scheme, as it's called outside of the United States, they don't have a 7% return target. They have a risk-free rate, or they have a risk-free rate plus a certain amount for inflation. But, the United States is in its kind of home policy area where this targeted rate of return is 7%. And so the challenges are a little bit different in the United States than I would see happening, say, in the Netherlands or in Australia, or some of the other companies who've really gotten a good jump start on this. So because we're a global investor, there may be some investment options for us in the near future, but I'm thinking that's likely 5 years out. It could have been 10 years out before this crisis. I think it is really amplifying and pushing this sense of urgency to think differently about supply chain, to think differently about the way workers are treated, to think differently about the environment and clean energy. But this is the time to do it. This is
Yeah,
a
that's
time to
interesting that you're saying it's sort of sped up. I guess everyone's thinking about all of these issues, which I guess is a positive thing. I mean, on that, going back to that 7% return target, CalPERS obviously invests in private equity as part of its efforts to meet that target. Is it sort of top of mind for you guys then to actively ensure that private equity managers that you're working with also share the same sustainability and responsible investment principles that you do?
Yeah, we believe that the relationships that we have with GPs are, it's really quite important. It's part of our 7% solution, or what our investment team has recently been calling the better assets and the more asset strategy. And the better assets they're really on that private equity side. And we want to make sure that we have strong investments around, not just the buyout funds or the growth funds, but also in co-investments, customized investment accounts, maybe even higher allocations to, certain high quality managers where we have a lot of conviction or a lot of, confidence in. So, I think the private equity companies of the early 80s, and, CalPERS was certainly one of the pension funds in the United States who was, really helped to raise capital or to provide capital to the growth of that industry or that asset class. And, the reputation of private equity companies at that time, I do believe, has evolved over the last 20, 25 years, where, early on, they had a certain reputation of breaking down a company, laying off all of its employees, not treating those employees well, not caring about the things that are really important to the people who were providing them the capital, i.e. the limited partners. But I do believe that has changed. At least the nature of the conversations that we've had with GPs, that certainly has changed. If you think about, rebuilding a company, there are, environmental, water saving, ways that, these GPs are thinking about, because it's more efficient. It's going to save that company's bottom line, but also at a time that they want to take that company back public, although, we've seen a little bit slower pace of returning those private companies into public. Consumers want to be associated with companies that are thinking about, environmental issues or human capital issues, or looking at the way they treat their employees generally. So I think that there is an alignment of interest between us and our GPs. It may not be going at the pace that CalPERS or our board would like to see. Those are private engagements, those are private companies, but it's really based on the relationship. And I think what we found is our expectations that we have of the GPs and the associated portfolio companies in the fund were really not misaligned. There's not a big gap between the expectations and what's really happening in those companies.
And I want to switch gears for a minute and talk about the practicalities of running your business during this very difficult and unique time that we're all in. I mean, CalPERS, I believe, has about 2/3 of its staff working remotely at the moment. Is that something that you guys might take forward? I mean, what are the lessons that you've learned in terms of management during a crisis like this?
Yeah, thank you. We have about 85% of our employees working remotely today. We have approximately, just under 300 employees who have to go into the office here in Sacramento in headquarters because the nature of their work does not allow them to remote work or to telework. Those are individuals who, are receiving mail. Those are individuals who are, running our imaging system, for, just a couple of examples. And I really have a lot of appreciation for, that, approximately, 300 group of team members who get up every morning and go into work, where the rest of us have, this luxury, this benefit, if you will, of being able to remote work. And so I think what we found early on is that, we were watching what was happening in China. We, certainly had a hypothesis, a very strong hypothesis that this was going to hit the US in some form. And it ended up being a little, probably more deeply impacted than what we had initially anticipated. But very early on, when we saw the numbers starting to come out of China, we had set up all of our core team to be able to have remote working capabilities, meaning they had the equipment, they had the remote access into the network, that they had the connectivity to one another through these virtual meetings, so that decisions could continue to happen, all of the control environment could continue to happen in a successful way. So we were able to do that really quickly. Our team has been flexible. Many of them are trying to take care of young families, trying to be school teachers, and then also trying to do this job that they have, at CalPERS. And CalPERS has an extremely important mission in that we have 2 million members who are relying on us to be able to pay this benefit when they're ready, or about 700,000 people who are relying on a retirement benefit every month. So we, as the executive team, we had what I call the daily huddles. We were checking in every single day prior to coming into this pandemic. And so I think we had a lot of the infrastructure around connectivity and communication already put together. But we expanded the individuals who came into that huddle. So we run a health plan also. I don't know if you know that, but we run the second largest health plan, or the purchaser, beyond the federal government here in the United States. And so we have a doctor on staff. So we brought that doctor into this huddle so that we were having our decisions informed by the medical profession. We had our human resources director come in, and we had our facilities director come in as well. And what we found is we were able to create this, what we call the COVID-19 dashboard, which essentially is just a set of metrics, performance data, so that we would know as the executive team how the workforce was functioning, what the productivity looked like day to day. And what we saw is that those productivity levels were extremely high. They were exceeding all of the targets and the thresholds that we had around strong performance. And the team is actually performing better in this remote environment than what we were doing on site. So I don't think we're alone in that. I think I've heard stories from other companies and public pension plans like we are, that the productivity has just been outstanding. But whether we can sustain that over time, that's something we will continue to address and look at, because our salaries are drawn from the trust fund, so we need to be able to show that value coming out of the trust fund.
Of course. I mean, I think it's pretty unique probably to have a doctor as part of those daily meetings, but in terms of the productivity, as you say, it seems like that's a trend that is probably being seen elsewhere as well. And finally, I just wanted to end by looking at the issue of leadership. I know you've said previously in your career that you've looked to examples of good leadership to follow. And I'm just wondering, in this, very unique and deep crisis that the whole world is facing, where have you seen examples of good leadership, either in the business world or among heads of state?
Yeah, I think it's leadership and the attributes around leadership, and the way that I look at it, at least for CalPERS and how I've looked at it throughout my career. As you indicate that my career has really been around following the leader, and leaders who have these certain attributes about how they develop their teams. That their success is really based on the success of others, not this focus on me, but the focus on we. And so there are some examples out there. There's some examples to the contrary as well. But I think the positive examples are individuals who stay positive, that this is a really difficult time for a lot of people, including our own team, including our 2 million members, including all of the stakeholders who operate around CalPERS, who are very curious about how we continue to manage our business under these extreme circumstances. But it's about staying positive about the future. It's not ignoring the importance of the current situation and not trying to diminish its impact on people, but understanding that data and information is the way that you fill the gap between the anxiety and that we have a plan. And and I think what I've heard from most of our members and most of our team is that with a plan, with positive leadership, and with a lot of communication, that's really what the leader's role is in a situation like we found ourselves in over the last last 5 months. So, particular leaders, I think, our own governor has done a nice job in leading the state around communication. He has taken his time, which is an appropriate use of his time, to be, giving updates out to, the entire population of the state. And that was something that, I've been doing at CalPERS as well, is doing these daily updates out to the team. And these updates can be very detailed, and as well as doing a Friday web chat with the entire organization. And we found those to be quite popular, meaning they're well watched. Over 2,000 of our team is really watching and submitting questions. I'm taking live questions as well as pre-submitted questions. And the questions range, you can't imagine, the questions range from, why am I continuing to pay for parking, to, what is our chief health director really thinking about a return to the office plan? And have we thought about all of the underlying, risks associated with bringing people back to the office? That, we have individuals who interact in community areas. We have a very tight-knit group of employees at CalPERS who like to interact with one another. They like to, sit together in the.
And you're missing that.
Yeah, yeah. So, I think that leaders who are high communicators, I think leaders who keep a positive approach, even though you're dealing with a very critical issue, so that you don't minimize it, those are the leaders who will be, sustainable over time, and those organizations will be successful. And, I think the last part of that is just the planning. You have to be nimble in this, that the plan that you had may not be the plan that you need into the future. So, just being aware of your surroundings, modify and adjust your plan accordingly, and just make sure that everyone knows what you're doing, and even more importantly, why you're doing it in the manner that you are.
Well, that's a really good point to end on, given the uncertainty ahead. Marcie Frost, thank you very much for your time.
Yeah, thank you so much. It was good talking with you.
Good talking to you. Thank you.
Yeah, bye-bye.